Ladies and gentlemen, stock market investors, we have some breaking news. And we do have some big data coming out tomorrow morning ahead of the Fed meeting on Wednesday that you really need to know. First and foremost, today we did get New York Empire State Manufacturing that came in. And yeah, it was not good. Okay, we were expecting 12. The forecast was 8. And the previous month was 31.20. Guess where we came in? 0.20. What? That's a epic miss. Like, on a preposterous basis. Now, what's interesting about this is if you actually look at the components here, the manufacturing output just hit a new 55-month low. Whereas other components of the flash PMI actually came in pretty good today. S&P Global Composite PMIs come in at 56.6 versus estimates of 54.4, so that was a beat. Manufacturing PMIs came in at 48.3. The estimate was 49.8, so that was a miss. But services came in really strong at 58.5 versus estimates of 56. Now, following this data today, you're actually seeing something very fascinating. Russell 2000 is up 0.86%. The NASDAQ is up 1.22%. S&P 500 is up 0.5%. But the Dow, the lagger old Dow, is down 0.12% today. But that's not what's fascinating. It's the VIX. The VIX is up 3.62% today to 14.31. Yes, still at very low levels, but you don't expect to see the VIX up 3.5% when the NASDAQ is up over 1%, when the Russell is up almost 1%. What that is telling you is people are actually kind of fearful under the surface. They're going out, they're getting some hedges today on their portfolios. I wonder why. Well, we have big data coming tomorrow morning, and we have the Fed on Wednesday. And honestly, every day of this week, we're going to have big data. Thursday is initial jobless claims and building permits. And then Friday is PCE, personal income, and personal spending, in which we will look at those estimates in just a moment. Bond yields today, following this data, are pretty much unchanged. And oil is down about 0.5%, which is overall a positive for markets. If we look at what markets are pricing in for Fed policy, it's actually fascinating as well. 97% chance of a 25 basis point rate cut this week from the Fed, and a 3% chance of a 50 basis point rate cut from the Fed, considering we had hotter than expected CPI, hotter than expected PPI. Services came in really strong today. The only thing that's come in relatively weak in recent weeks seems like initial jobless claims that has started this 3-week kind of rising streak, and we'll see what Thursday's initial jobless claims come in. That could be 4 weeks. That's a little problematic, but it's too early to say if it will actually become a problem or not. And then manufacturing, right? Manufacturing data today came in weak, and markets are boosting the odds of a 50 basis point cut. And they are certain that the Fed is going to at least cut rates 25 basis points this week. Now, besides just the catalyst that we have, the economic data that we have for this week, markets are also a little nervous on valuations. And I think rightfully so. I mean, just look at the heat map here for forward PEs. These are forward PEs, okay? Apple is at 30.27. Amazon at 37.07. Microsoft at 29.65. Nvidia at 29.66. Okay, Apple, Microsoft, Nvidia, even Amazon. Wow. Those are extreme valuations for companies that are growing very little, which are actually projected to slow down next year. That makes me a little nervous about big tech heading into the end of this year. Now, could big tech continue to go higher? Sure, of course. But as hedge funds and institutions kind of rebalance their portfolios for this next year, it's hard to make a case to be overweight these stocks with the kind of valuations that they have. Now, as I say all the time, valuations do not matter until something changes. So with this week's data lineup and with the Fed, does something change? Do valuations start to matter based on the new information that we get? That's going to be the big question, because let's face it, these valuations are egregious for your big tech names. But if nothing changes, if the same narrative prevails this week, then it doesn't mean these valuations need to come under pressure. Coming in tomorrow morning, we are going to get retail sales month over month. Now, this is very important because the economy is really dependent on people spending money. Now, this data is for November, the holiday shopping season. The numbers that we've gotten so far look pretty good. I don't think there's a big reason to be concerned about the data tomorrow morning, but in the off chance that it does come in lower than expected, that's going to throw up a lot of questions about next year. So that could be an issue. We will get industrial production month over month, expecting a positive 0.3%, and business inventories month over month, expecting positive 0.1%, as well as the NAHB housing market index, expecting that will rise from 46 to 47. Okay, now one reason why I say there's not a lot to be worried about heading into tomorrow, in my personal opinion, is this. I mean, shipping giant Maersk expects strong demand and another year of disruption for global trade in 2025. The CEO says the North American market remains strong in a sign of continued demand from the U.S. consumer. But several threats loom in the supply chain, from another potential East Coast port strike in January to Trump tariffs on China and Mexico during the key Lunar New Year period in Asia. North American container prices experienced the sharpest rise globally in recent months, and Charles Van der Steen, president for Maersk North America, says while he does not see any panicked front loading of cargo, disruption is once more ahead of us for the global supply chain. And that could be an issue. But they do see strong growth for 2025 from the U.S. consumer, which, I mean, ahead of the data tomorrow, sounds good. Now, again, I think the larger concern is really Wednesday when we get the Fed summary of economic projections. If the Fed, for whatever reason, is super hawkish or changes their stance on kind of growth or inflation expectations, that would be an issue, okay? If something changes, in other words. Now, I'm not expecting something's going to change. I think the Fed's made it pretty clear that, you know, before they kind of know what Trump tariff policies are going to look like, they're not going to try to get ahead of that and forecast what their Fed policy is going to be to react to that. Okay, they're going to react once they know for sure what is going to be implemented and what is not going to be implemented. Here's the deal. Heading into Wednesday, though, the markets may be quite nervous, especially tomorrow. I think tomorrow you could see weakness based on the nervousness for Wednesday's Fed meeting. With that said, as long as nothing changes, what you're most likely going to see happen is nervousness heading into the event on Wednesday and then relief afterwards. Now, when people are nervous and they find out it wasn't as bad as expected, that tends to be very bullish, okay? I believe I used this example in the last video, but imagine you are terrified of the dentist, okay? And I know, it just, this example just works too well. You're terrified of the dentist, you're nervous, whatever. You go to the dentist, you find out you have no cavities. All of a sudden, you are very relieved, okay? That's kind of like what markets are going to experience, right? If it's not as bad as we expect, then you get relief. In terms of the markets, that relief tends to be markets moving higher. Okay, that's the best way to kind of imagine it. And I don't think anything's going to change. And that would likely set us up for that year-end rally into a correction in Q1. December 15th through December 31st is historically the best 2-week period for markets in any market in any time. Okay, so as long as nothing changes, I would not expect a weak second half of December. Now, on Thursday, you will get GDP growth rate quarter over quarter final numbers for Q3. You will get initial jobless claims. You are expecting these are going to move down quite a bit from 242,000 last week to 229,000. The lower, the better. That's the bottom line. If you come in higher, that's negative. Philadelphia Fed Manufacturing Index, consumer confidence, existing home sales, Kansas Fed data, all kinds of second tier kind of data on Thursday. And then more big data on Friday with core PCE price index month over month expecting 0.2%. That would actually be a slowdown from last month, 0.3%. Personal income month over month expected at 0.4%, and personal spending month over month expected at 0.5%. So every day of this week, you have very important data. And I think that's why the VIX is moving higher today, because some people are nervous about what this could do to markets. Now, with that said, Nvidia has now fallen into correction territory, down more than 10% from its record close. And what's actually very fascinating about that is the rest of big tech is actually doing pretty well. Okay, Meta's up over 1% today. Apple is up over 1% today. Amazon is up almost 2%. Google is up almost 5%. Microsoft up 0.5% today. Besides Nvidia, that's down 2%. And Netflix, that's down about 1%. So something wonky is going on here with your pal Nvidia. Now, the percent of stocks trading above their 50-day moving average is moving up a little bit today to 54.71%, up 0.78% today. So less than 1% of stocks are breaking above their 50-day moving average today. Not a great number, but you are moving higher nonetheless. And just from a purely neutral standpoint, not being bullish or bearish on our markets are pretty neutral here. You might think markets are pretty optimistic or euphoric, and in certain names they are, like Apple, right? Why is Apple doing as well as they have in the last 2 weeks when Apple's basically a no-growth company trading at crazy valuations, again, for being a no-growth company? Like some of these names don't make sense. But if you look at the average stock in our markets, I mean, it's not euphoric at all. Look at the RSP. It's completely died recently. It's hanging in there at support at the 50-day moving average, barely green today, up 0.05%. Like, internally, you could see a pretty aggressive year-end broadening of our markets from the perspective of, well, markets really are not bullish. They're not. They're neutral at best. CNN's Fear and Greed Index is at 56, but really it's neutral. It's neutral at best. I would say it's pretty fearful in certain areas of our markets. Market momentum is greed, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme greed, market volatility is neutral, safe haven demand is greed, and junk bond demand in extreme greed. Like, you're just not that bullish right now. And from a contrarian perspective, I mean, you could see a broadening year-end rally pretty easily. Seth Golden writes on X, is it time to buy the NASDAQ? The Santa Claus rally for NASDAQ is not always akin to the S&P 500 Santa Claus rally time period. He says, buy QQQ and NDX 3 sessions before Christmas and sell 8 days later. Since 1987, only 5 failed trades or a 25-5 win rate. I like them their odds. You? And Funstrat on X says three reasons we see investors buy the dip and drive a December rally to 6,300. Also, Trump reiterates Bitcoin reserve plans, adding upside to our 250,000 base case for Bitcoin in 2025. We are in the final weeks of 2024 with 11 trading days left. So Tom Lee is expecting a pretty aggressive rally still into year end, which from current levels would be upside of approximately 3.7%, which looks big on the chart, but in all reality, is not that big. Now, the best case scenario would be we get that upside in the S&P from a broader market rally, and you actually get big tech that relaxes or sells off a bit. I think that would be the healthiest thing of all. So let me know what you think about all of this information down below in the comment section. That's really it. Nothing else really happened today. So I would love your thoughts on what this all means heading into tomorrow, because retail sales, again, will be a massive catalyst to really help alleviate some fears about maybe the economy slowing down, and to reiterate that bull thesis, or confirm that the economy is slowing down and really ramp up some of those fears into year end. Ladies and gentlemen, that is going to do it for this video. Let me know what you guys think down below in the comment section. Hit the like button and subscribe to the channel if you have not done so already. Have a fantastic rest of your day, and I will see you in the next one.